Hello, this is Bob Steele. In this video, we will be discussing Chapter 3, Product Cost and Cost Accumulation in Batch Production Environment. Learning objective number 1, discuss the role of product and service costing in manufacturing and non-manufacturing firms. Product and service costing our focus changes from financial statement costs to operations. So remember, the financial statements are what we have started out with most likely, and the financial accounting product costs are used to value inventory and to compute costs of goods sold. That's the primary function of the financial accounting and the income statements. On the managerial accounting and cost management side, which is of course what we are focusing on in this area, product costs are used for planning, controlling, directing, management, and decision making. So remember that what we're trying to do, of course, is for internal use, for management use, and that is generally for decision making ultimately. So learning objective number 2, learning diagram and explain the flow of cost through the manufacturing accounts used in production costing. So if we take a look at our old T accounts here, we're going to go through the manufacturing process in the T accounts and look at the flow from the raw materials to the end product. So remember that when we look at the T account, we got the T here, the debits are on this side, the credits are on this side. We're looking at inventory in this case when we talk about work in process, and we're looking at inventory when we're talking about finished goods. So if we're looking at work in process, that means the stuff that we're starting to make, the things that we are making in a manufacturing process. 3 components to the things we start making. 1, raw materials. That's obviously, if we're making something like guitars, that's going to be the wood that we make for the guitars. So what we're going to do in order to create that information is we're going to requisition the wood, and we're going to debit the work in process once it's in work in process, because it's now increasing inventory. And remember, inventory is a debit balance, so we're going to make it go up with the same thing, which is another debit. So, and then the direct labor, any labor that goes into the actual production of the guitar directly will be directly input into the work in process. So we're going to credit whatever cash or payable, and we're going to debit work in process in this case, because we're talking about an asset, not an expense in this case, until we, of course, sell the guitar or whatever we are producing. Manufacturing overhead is all the stuff that we don't know where to put. So that's like the depreciation on the factory, the supervisor's salary, the small things like glue and stuff that goes in the guitar that we're not going to allocate the cost specifically because it would take too much time and money to do so. Therefore, we're going to put those things in this big batch, and then we have to somehow allocate those items to the particular products or batches of products or work in process in some way. And those are the 3 components of the work in process. Then we're going to decrease work in process with a credit, and we're going to move it to finished goods. Now, finished goods is an asset. Assets have debit balances. So when we move it to finished goods, we debit the finished goods, increasing it, credit work in process, decreasing it. And then once we sell the finished goods, we credit finished goods, that asset, reducing it, and we debit cost of goods sold. Cost of goods sold is an expense account. So when we sell the finished goods, remember what we're going to do is we're also going to record sales, which we're going to credit sales, and we're going to debit like accounts receivable or cash. And then we're also we're going to debit cost of goods sold as well, and credit inventory, in this case finished goods inventory. So cost of goods sold is an expense. It has a debit balance. So therefore we're making the cost of goods sold go up with a debit, which makes net income go down. And then at the end of the day, we will close out all expense accounts, including, and income statement accounts, including cost of goods sold, to the income summary, and ultimately to the capital account or retained earnings. So that's the flow of the manufacturing process. Learning objective 3, distinguish between job order costing and process costing. So job order costing is what we're going to focus on here. These are the 2 types of manufacturing processes that we could have. So job order used to production of large, unique, high-cost volumes built to order rather than mass production. Many costs can be directly traced to each job. So a job shop operations are going to use this. Products manufactured in very low volume or one at a time, so very customized things such as construction. Batch production, multiple products in batches of relatively small quantities. So then if we have these batches that are somewhat unique, then we can do this job order cost system. So typically, typical job order cost applications, special order printing. So if the printing jobs are all different and they're specially ordered, job order cost systems, what we'll use. Building construction. I've worked a bit in construction area, and all construction jobs are often different, and therefore we're going to have to allocate the costs to those construction jobs. Also used in the service industry. So I've also worked in CPA firms, law firms, and hospitals often use a job order costing system in order to allocate the costs to our particular job. And costs in those cases in the service industries will generally be the costs related to the man hours, the time. Process costs, on the other hand, used for production of small, identical, low-cost items, mass-produced in automated, continuous production process. Costs cannot be directly traced to each unit of production. Types of process cost applications are petroleum, paint, paper mill. So if we're producing something like petroleum or something, we're talking about something that's going to be very similar. The process is the same, and therefore we're going to have to allocate the costs in something. We're going to use a process in order to allocate those costs, and that's what we'll talk about in a later chapter. Accumulated costs in a job order cost system. So we're going to focus on the first one, the job order cost system. So this is going to be the one that we're focusing on when the things that we are producing are usually distinct in nature. And so the primary document for tracking costs associated with a job is the job cost record. So a job cost record could look something like this. Job cost record, we have the job number, we have the start date, and we have the description, we have the date of completion, and the number of units. Remember, we have our three components: direct materials, direct labor, manufacturing overhead. We can then sum those up down here and come up with our total cost. Now, many people might think of this, see this, and say that looks kind of like an invoice or a bill for a construction job. And oftentimes, the job order cost sheet is going to be used in order to make estimates on a job as well as to create the invoice. We might take the total cost of the job and mark it up, whatever our billing rate is, 30% or whatever, and that would be the cost of the job. So a material requisition form is used to authorize the use of the materials on a job. So if we were just to get this job, this was a new job, and then the first thing we would do is estimate the materials we need, send a requisition form to the warehouse that has the materials, and requisition those forms. Requisition form might look something like this. Here's the requisition, here's the job number, here's what we need, item, quantity, cost per unit, total cost. That total cost then would be added to our direct materials here. So quantity, cost, 18,000, cost of the materials. So in essence, this job cost is backing up the work in process account, which was debited in this case for 18,000, and the materials account was credited for 18,000. Then if we took a look at the direct labor, accumulate direct labor costs by means of work record, such as a time card for each employee. So a time card might look like this. Here we got the in-out time and the job number. So we're allocating to the job number. If you work for a CPA firm or a construction company or something like that, we need to allocate our time to the job so that we know the cost of the job and we can bill that job for that time. And then of course that time will be included in our job cost. So notice the confusing thing for many people is that in this case, when we allocate the time, it's not an expense in this case of the company as it has been in a service businesses that we talked about in the past, because this direct labor is not incurred in order to generate revenue in the same time period. It was incurred in order to generate this asset of this job, which won't be expensed until we sell the job or sell the goods. In the form of cost of goods sold will be the expense. So instead of debiting wages expense, in this case we're going to debit work in process related to the wages for the direct labor of the job, and credit cash or wages payable. Then we have the applied manufacturing overhead to jobs that use the predetermined overhead based on direct labor hours. So this is often confusing as well. What we're talking about in the overhead are all the things that we couldn't apply to a job. So if we're talking about that thing where we make the guitars, we know the depreciation on the warehouse should be part of the cost of the guitar because the warehouse was used in the production of the guitar, but we don't know how to apply them to these different batches of guitars because they're not all the same. So we need to find an activity base, something that we can use to allocate them between these two things that aren't the same. Maybe a better example is construction jobs, where if we're trying to allocate supervisor time to different construction jobs, and we don't know exactly how much time he spent in different jobs, but we know his total hours, and we're trying to apply them to the jobs. You would think if there were 5 jobs out there, we could just take the total time and divide by 5, but the construction jobs may be totally different. So therefore, how do we allocate this person's time to the jobs in a proportional way? Many times we'd use the direct labor hours to do so, because direct labor hours would tell us in proportion how large one job is compared to another job. So when we talk about direct labor hours in relation to applying out manufacturing overhead, realize that the direct labor hours has nothing to do with wages in this case, at least direct labor wages, because all we're doing is using the direct labor hours in order to help us allocate the overhead, which does not include direct labor. It includes indirect labor and other things that we couldn't apply directly to the job. So then we can take these totals, of course, and add them up here, and then we get our total here, and we've got our, if we can divide that, and we get our unit cost here. So then we can have the shipping information. So if we had units shipped, were 60, units remaining therefore would be 20, and that would give us, times our unit cost would be the 12,000 here. And that's the end of the first section. Thank you.